Good morning, everybody.
Good morning.
You are able to hear me.
Morning.
I'd like to take this opportunity to welcome all of you to our COVID-19 webinar. Of course, this is in terms of the communique that was issued by the regulator and linked to a number of issues and questions that have been raised by our stakeholders. We therefore decided that we'll have this webinar to clarify a few questions and areas where we still need a bit of explanation. As you know, COVID-19 pandemic has caused general economic distress, not only in our country, but in a number of countries worldwide. We would like to take this opportunity, therefore, to welcome all participants to our webinar. I'm aware, as I've already stated, that many questions have been received from the retirement sector itself. And of course, we've curated some of these questions and consolidated them into questions that can be, responded to by specialists in our sector. Now, there's a number of issues, as I've already indicated. Of course, most of them are diverse, and we've chosen to sort of focus amongst the pressing issues. Of course, the first one being the payment of contributions. As the Institute of Retirement Funds Africa, we are planning to host other webinars. And therefore, we'd like to encourage you to continue sending your questions. And all these will be advertised, and the content itself will be shared in the sessions that we're going to be having shortly. You can therefore forward all your questions to this email, reception@irf.org.za. reception@irf.org.za. Thank you very much for listening and participating in this webinar.
Good morning, everybody. I'm Leanne van Beek, and thank you for joining the webinar. I'm going to start sharing my presentation in a minute. I just want to check with Enos. Enos, have you finished with your presentation?
I'm done, Leanne.
Okay, perfect. All right, I'm going to share my screen with you now so that I can show you the presentation. If you could just give me access to do that. Right. Are we good to go? Can you see the presentation? Not yet.
Not yet.
Okay, I'm going to try again. Right, there, it should be up. Okay.
We can see it now.
Perfect. Okay, so the IRF has asked me to just share a little bit about the contribution options that are available to funds. So I'm going to do a few minutes on that. I'm not going to do all the options available because obviously those are suggested by your rules and by your own circumstances. I'm going to focus mainly on those that I've seen to be more present. Just a reminder of that before we start. So the contributions is affects members' retirement funding, but on the other hand, we need to remember that Section 13A of the Act creates criminal offences for non-payment of contributions, for underpayments of contributions, and for non-compliance with Section 13A itself. So it's very important that we get this right when we are looking at either suspending contributions or reducing contributions. You'll see that as I go through my presentation, I'm not going to go through every single slide. I'm going to do the gist of it, but you will receive the slides afterwards as well as a short note about them. Okay, I want you to remember this section of the Pension Funds Act, section 13A4. When you're amending your rules or changing your rules to allow either for a reduction of contribution or a suspension of contributions, you need to remember that the earliest date that you can do that from is the date that you sign your trustee resolution. If you cannot backdate it past that. I'm going to talk a little bit about the effect of that in a minute. Okay, so let's talk about this. Why the urgency of rule amendments? So why is everyone struggling to get their rule amendments through now as quickly as possible? So many employers and funds want to change contributions for April because they're in lockdown or because they have had partial or total business shutdowns. Now, April contributions are payable by the 7th of May. Just remember that. And if you remember the earlier part of the pension date that I spoke about, the date of the resolution for changing April contributions has to be done by the 7th of May in order to change April contributions. So generally speaking, this is what is creating the urgency. Plus, on top of that, we have this legal concept which says that you cannot pre-implement your rules. So they need to be registered before you can implement them. Now, this is creating a lot of urgency with respect to April contributions. Tomorrow is 7th of May. So we know that the general rule is do not pre-implement your rules. This is going to cause even more financial difficulties for employees and employers in financial distress. I'm hoping that the FSCA, and I'm not going to put Zarina, who has joined us, Zarina Kamrudian, on the spot on this. She can comment later if she'd like to. But I'm hoping that the FSCA will look at something more general with respect to rule amendments that have been submitted before the 7th of May, but have not yet been registered. But we haven't seen that type of general exemption yet. The funds may be able to make some sort, and employers may be able to make some sort of force majeure arguments if their rules have that type of rule in them to say, look, it's actually impossible to pay full or complete contributions for the month of April or May or whatever it is. But again, no employer wants the criminal sanctions attached to Section 13A. So we're trying to get rule amendments through as fast as possible. We're hoping that the FSCA are looking at some type of general rule around this. However, we also know that the FSCA itself is under pressure. They will be doing all sorts of new rule amendments. They've got lots to do on COVID-19 as well, so it is a bit of a perfect storm. Okay, so just so you know, on your rule amendments, submit them urgently. If you have an employer request, then attach it to your rule amendment if you can. We're going to talk more about umbrella funds and general rule and special rule amendments in a panel session a bit later, so I'm not going to deal with that now. Just ensure that your rule amendment has the date on which contributions are going to be suspended or reduced as agreed with the employer, and don't include other stuff with your rule amendment. Just do it on COVID-19, refer to that in your covering letter as well. We're going to also deal with signatures on rule amendments and resolutions in the panel discussion. All right, so we know that the FSCA has issued, amongst many other communications, Communication 11 of 2020, which is really aimed at employers and employees that are in real financial distress, enabling employees and employers to make full or partial contributions. But what does this actually mean? So we know that there are a number of options. As I said, we're not dealing with every single option because that is often going to be dictated by your own circumstances, your employer's circumstances, as well as your own rules. You know, there may be things in your rules that are not in other rules. So we're just dealing with the main options here. Just remember this as well, requests from the employer, with the employer, you need a request from the employer to reduce or suspend contributions, and have to engage with the employer, right? You're not just going to take the employer's word for it, although in you know, standalone funds, the board may be closer to the employer than umbrella fund trustees, but you need this engagement with the employer. We're going to talk, Geraldine is going to talk a little bit more about this during the panel session, you know, the meaning of what is financial distress and how do you examine that, etc. But that engagement is required, and you need to keep your evidence of that. These examples on screen of rules that may apply are those that were provided in the communication from the FSCA, and you may have others. So obviously the most desirable option from a purely retirement funding point of view is to continue to make your contributions at the same rate as previously. And it is also desirable that both risk premiums and fund expenses or operational costs continue to be paid. However, we know that this may not be an option depending on your employer's circumstance. I just want to give you a quick reminder. You need to check not just what the rules say, but the employer needs to check its own terms and conditions of employment. Okay, there's a separate relationship between the fund and its members as opposed to the employees who are members. And it may be that your terms and conditions allow you to change contributions, benefits, etc., or maybe that you've got some type of discretion to do it, or you may be in a position where you have to agree it with your trade union or employees or whoever it is. So you need to make sure that you've done the work around that, not just the rules. Right. So I just want to clear up some definitions here. So when we are talking in the webinar, and you would have your own understandings of this in an organization, but when we're talking in the webinar about contributions being suspended or reduced, etc., this is what we mean. So if you look at this table here, contributions, they either continue as they were before, they're suspended, or they're reduced. Now, this is what we mean by that. So if contributions continue as is, your contributions are exactly the same as they were before COVID-19, and your risk premiums are being paid, your fund costs are being paid, and there's an amount going to retirement funding in the fund. If your contributions are suspended, what we mean by that is there are absolutely no contributions being made to the fund. So your risk premiums are not being paid, your fund costs are not being paid, and there is no retirement funding. Okay, so that is an extreme situation, but it is possible. When we talk about a reduction, what we mean is that there may be an amount of contributions coming in, but it's not as much as before. And that may cover, depending on how much is being paid into the fund, it may cover your risk premiums, it may cover your fund costs, and there may even be some left going towards retirement funding, depending on the level of contribution that is being paid into the fund. So that's what we mean by suspended and reduced. When we talk about risk premiums, okay, generally we are talking about risk premiums for fund-owned policies as opposed to employer-owned policies, and we'll distinguish between the two if we need to. So if you are going to reduce or suspend contributions, right, then either your rules will allow for it already, or your rules do not allow for it, right? There's one of the two situations. You're going to deal with both. If your rules allow for it, it could be a general rule, or you could be using a specific type of rule. For example, your absence from service rules, or your rules don't allow for it and you're looking at doing a rule amendment. Okay, so the other option is that you are using pensionable salary in order to make a reduction to the contributions that are being paid to the fund, or to totally suspend them. I'm not going to talk a lot about that today because I think that that option is fairly self-explanatory, but I have included slides on it, so you can refer to those slides. Right, so let's go to suspend contributions to the fund altogether. No contributions being paid to the fund. 2, reduce contributions for a period, so there are some contributions being paid to the fund. And option 3 is change the amount of a pensionable salary, reduction in remuneration, or do that anyway usually, or changing it the percentage of pensionable salary that is paid. Now, as I said, I'm not going to talk about that option, but the slides are available. Right, so let's look at this first option, suspending contributions to the fund altogether. Right, so in this option, we are not paying any contributions to the fund whatsoever. So if we are, I'm just going to move this around a bit. So if we are paying no contributions to the fund, that means one of 2 things. And I've set these out here. 1, your risk benefits and premiums and fund costs are no longer being paid. Or your risk benefits and your fund costs are paid for from an alternative source. So they're not being paid for through contributions, they're being paid from somewhere else. Hello? So if we're dealing with the first option, so we've got no contributions coming into the fund and risk benefits and fund costs are not being paid. If that is the case, right, so your employer is in complete financial meltdown for this option, then the issue is this, is that your fund-owned risk benefits may lapse, and you need to speak to your insurers about that to see if there's something else you could negotiate. 2, you need to see whether any of your employer-owned policies, the premiums for those were being channeled to the fund. So in some cases, you will have fund contributions where you have the employer-owned risk policies that are being deducted from those contributions. Now, if your contributions to the fund cease, that means that those employer-owned policy premiums are not coming off contributions and are not being paid over to the insurer. Right, so you need to understand if that is the case in terms of your rule and start speaking to the employer about that, whether they're going to pay separately or what's going to happen. Then fund expenses will also cease. So that is the first option. Your second option is that you funding risk benefits and fund costs from some other part of the fund, right? So I have seen fund rules already that allow risk benefit premiums at least to be funded from fund credits themselves. Okay, so that is one option, and I've seen other options in rules as well. We're going to deal a little bit with this issue in the panel discussion a little bit later. However, there's an option, and I have seen existing rules like that. So those are basically your main options if you have totally suspended contributions to the fund for a period. Now, the way that you get to that, so your employer says, sorry, no contributions, employees, no contributions. How do you get to that position in terms of a existing rule that will allow for it, or you need to amend your rules if you don't? If you have existing rules that allow for it, it may be your absence from service rules. Those seem to be the most prevalent rules that, if you're not using a general rule. So your absence from service rules will often allow for different scenarios, and you've got to check to see whether each of those scenarios are relevant to your circumstances. So they may allow for where there's full remuneration being paid, partial remuneration being paid, no remuneration being paid. So you've got to consider your specific rule. Now, a lot of these absence from service rules, you need to remember, were not drafted with a pandemic in mind. They were drafted for things like secondment or maternity leave or something like that. So be very careful that your absence from service rules apply to your circumstances. And we're going to deal with a panel discussion about the circumstance where you have members that are doing some work from home, but not all the work that they usually do. So often I found your absence from service rules can't be used in totality because then cannot be applied directly to circumstances. And the preferable option is to do a general rule amendment. Okay, if we move to option 2 very quickly. So in option 2, we're talking about reducing contributions. So you've got pre-rule amendment at whatever rate you are paying your contributions, and now you're lowering that rate of contributions and paying less. Paying less, you need to understand what that lower contribution is going to cover. So the trustees need to be clear in their own mind, and they need to start communicating that to members and employer, etc. So is it going to cover risk benefits? Is it fund-owned risk benefits? Is it going to cover fund costs? What fund costs, etc., etc. So the level of contribution that you choose when you reduce contributions is often related to how much you need to pay your risk premiums and your fund costs. With respect to employees that are receiving either any type of UIF payments, so whether that's TERS or reduced pay, for example, those employees, if they've been laid off or furloughed, are still in employment, and we need to do that. But also those TERS payments are not remuneration. The employee and the employer could agree together, as an example, to pay contributions out of those TERS payments, but they are not remuneration. Okay. Option 3, as I said, I'm not going to deal with this too much, but as you can see, I have included some information around this, and the note will include information as well. I just want to mention this. So we know that the FSCA has said, be very careful to treat your customers fairly during this time. Employees and members are even more vulnerable than they have been before. Markets are volatile. There's a lot of uncertainty, so we need to be focused on treating customers fairly. The tax implications of reducing or suspending your contributions for a period doesn't affect your tax approval status. And as regards administration, administrators and funds need to ensure that proper records are kept of those members that are affected by reduced or suspended contributions. And my suggestion here is funds should start getting this reporting already so that they know whether their administrator can produce of specialist report. Then on communication. So where the fund is suspending or reducing contributions, it is the fund's duty to tell members about that. Fund benefits, trustees are responsible for the benefits that are provided. And the FSCA has asked those to be done within 30 days of receipt of the request from the employer to reduce or suspend contributions, or from the fund makes that decision. I would just apply the earlier date to be safer. Then the other comments I want to make is be very clear that the fund relationship with its members is different to the employer's relationship with its employees. So even if the fund is communicating, the employer still has a duty to continue to communicate with its employees, whether it's about contribution, whether it's about risks to fund or mitigation of those risks, etc. So the employer, both the employer and the fund have separate duties to communicate to the same employees, and often it's better to coordinate that. Just remember that the fund's communication to stakeholders about COVID-19 implications is not simply about contribution. Obviously, changing, Is there some of the risks that members have been exposed to, and how you're going to mitigate those risks, your business continuity plans, etc. So there's quite a bit of information I know all of you guys are busy with now. Right, that's all from me, and I'm going to hand back to Wayne, or I can hand back to you. Who's next?
Thanks, Leanne. Wayne, are you picking up from here? Wayne, can you hear me?
Yes, Geraldine. Can you see the screen? I've put up the...
Yes, I can see
Okay,
the
great.
screen. Thanks, Wayne.
Thank you.
Perfect. Can I carry on?
Please.
Thanks, Wayne. Thanks, Leanne. So as Leanne hinted when she was talking, often when we have these legal implications that is going to affect the operation of the fund, one tends to forget about, once the legal framework or parameters have been set in place for the fund, we often think about administrative implications too late. So I'm going to kick off my talk about, I've headed it the now and the then. I think for some years now we have been saying that there should perhaps be greater focus on the technical application and how we administer funds, because ultimately it is a crucial part of retirement funds existence. So if we look at the now and the then and we say, let's look at the lessons from long ago, I think historically, some time ago, systems were not as sophisticated as they are these days, and proper record keeping on member level was not always a priority focus item. So these days, when we have events that is going to result in changes in how we administer member records or keep record of their contributions and so forth, it is important to actually do it up front. So we need to align the administration system and the member records with what the fund is currently putting in place. So at face value, it perhaps does not seem that intensive, but once we start digging into it and we look at all the different scenarios and anomalies that can arise out of these changes, we start seeing that it is not that simple. If we look at something like a breakdown of contributions as a start, Leanne was talking about the proper record keeping also, and we've seen often in the past there were gaps in member contribution holidays due to surplus and so forth, created gaps in member contributions. So it's all good and well, all of us are aware currently of the COVID situation, and that there's a potential suspension of contributions, whether it be partial, fully, or whether it be absence in service and so forth. There'll be a breakdown in contributions. So we're all aware of it, and your administrator and your consultant that currently deals with your fund might be aware of it, and so also your employer. But what about 10 years or 15 years or 20 years from now, when a member poses a query on the build-up of his contributions, and then suddenly there are gaps? And whoever is dealing with the fund is not necessarily going to remember at that point, oh yes, the reason for it was because of a COVID-19 suspension in contributions. We see members, employers, pension funds adjudicate the complaints, transfer value queries, where members often ask, well, how was that transfer value made up for the Section 14? So I believe it is imperative that we consider this when we talk about systems, so that from a systems perspective, we have got facility to actually attach reasons to breakdown of contributions. So if you look at a member's record, you're not going to see a chronological flow of contributions necessarily, depending on the system, or you will have a number of months where there is 0 contributions. And if we can somehow record the reason for that, obviously it will make our lives a lot easier. The same would then go for reduced pension salaries or contributions where there's partial. Why for that period did I suddenly have less contributions or reduced contributions? The same would then go for absence from service beyond the norm of what we normally have, which is maternity suspensions, where members don't contribute whilst they're on maternity leave, or sick leave without pay, or so forth. Those are the standard reasons that generally is currently being used. So if we're now going to have a absence of service where there's no contributions and there's a COVID-19 reason, then that must then also be facilitated through the system. Wayne, if we can move on to the next slide. Thank you. Okay, so if we then look at the area that is most probably going to have the greatest impact as far as monthly processes are concerned, it really starts with your contribution update. So here it is important for both the administrator and the employer to understand the impact of the decisions and what is required to be submitted in terms of Section 13A. So many administrators have got a facility whereby the employer will record through some online facility the changes that is taking place. But this online facility might not necessarily accommodate the COVID-19 or the financial distress reasons. Also then, once the administrator receives this information on the other side, it is very important for the actual administrator that is running with that fund to understand how to apply practically what was put into place from a legal perspective. Because we don't want to get to a point where updates are run and record keeping on members' records are incorrect. So if we look just simply at risk salaries versus pensionable salaries, most systems would allow for multiple types of salaries, taxable salary, risk salary, pensionable salary, and you've got what we can call the system rules then read certain processes that's aligned to certain salaries. So risk salaries, as an example, would simplistically then mean that is the salary on which the members' insured risk benefits would be based on. You could then have a different salary on which contributions are based. So you would often, as an example, find this where you've got commission earners and you've got fluctuating salaries. They would peg a consistent risk salary to base the insured benefits on so that your insured benefits don't fluctuate, and they would then have a pensionable salary which is more closely aligned to the actual commission earnings of the member on a monthly basis. So that's just an example. So pretty much that would apply in an instance such as this also, where we have got insured risk benefits, and let's say the employer is saying we are going to have what Leanne referred to as a partial suspension. So you're going to suspend retirement fund contributions to the fund, but the employer is going to carry on paying for the risk benefits for the member. So now obviously you've got a pensionable salary basically of 0, and you've got the risk salary that is different. So it is very important that the employer and the payroll staff of the employer and also the administrator understands how this needs to be applied on a system level. The same would then account for the costs. The costs then could include administration costs, consulting fees, any other operational expenses that is, let's call it payroll or contribution-based expenses, and then of course the costs for your insured risk benefits. So those could generally be based on pensionable salaries or risk salaries. But if we now have a scenario where we do have costs that is going to run on the fund, again, you now need to direct your system as to where or what it should base these costs on. So if we look at insured benefit costs, that should then be based on a risk salary, because your risk salary is going to be not the same necessarily as your pensionable salary. Where would you, if you've then got a pensionable salary of 0, where, as an example, must your system look to actually calculate the administration and consulting costs, which would generally be based on a pensionable salary? So if we start looking at it like that, we start realizing that it is not just a simple, okay, the legal parameters of the fund has changed, let's just run this on the system. There is some input and work that needs to be done. Some of these, depending on the sophistication of the system that is used, some of these would be able to be implemented without development changes to the system, and others might then require development changes. If we also, if we look also at the costs, we saw Leanne mentioning that there could be scenarios where the costs associated with the fund operations or the admin and consulting can then be deducted from member credits. Again, this would require some intervention from your systems team or your developers, because it is not often that you would find, as an example, that a payroll-based cost is deducted from the member fund credits. Also, what if the members fund credit is small and if the member's only been participating in the fund for a month or 2, depending on your suspension period, maybe there's not enough in the fund credit, though, for us to understand that when we look at insured benefit costs that can be run against the member credits, we must understand that it is only fund-owned policies, or what we call approved benefit, risk benefit policies, where the costs can be deducted or run against the member fund credits. Unapproved risk policies, or policies that in the name of the employer, not owned by the fund, those costs cannot be run against the member's fund credit. If we can go to the next slide there, Wayne. So record keeping, Leanne mentioned this also. So we can see it's imperative that we have proper record keeping on the administration system. We cannot find ourselves in a position where history is repeating it, where we don't have proper record keeping. Through IRF, we have got a task team that has started some time ago with FSCA, where we are looking at the type of information that is handed over from one administrator to the next, if a new administrator is appointed to a fund. And a big part of it is the historic record keeping on member level, if we want to call it monthly contribution roll-up, monthly salary updates. That is the type of information that creates huge headaches in our industry, and it's imperative that when we put projects such as this in place, that is going to impact admin, that we plan properly on administrative level. The application submitted by employers, again, there must be a proper record kept of this. The motivational application submitted by the employer all the supporting documentation, the thinking and the engaging that went on behind the scenes between the fund trustees and the employer. The administrator is generally the party that's responsible for keeping those records. And when I talk about administrator, I'm not specifically referring to the administration department within the administration house. It could be the consultant, the legal guys, whoever. There needs to be proper record though, because should the auditor come and want, when they do the statutory audit, or the regulator want to come and see the information that is related to this case, there should be a proper record keeping there. So just very briefly on the next slide then, if one can move along there. Financial distress member loans, I'm not going to talk a lot about this. It is still an area that is in discussion, but we will see there has been some mention in the news about the application for loans to members through whether it's Act. Suffice to say at this point, all I'd like to say is that this again would be an area that would impact quite hugely on how administration is done on system level per member record. Think about it as an example. Has already got a home loan guarantee or home loan facility in place, and a member is granted a financial distress or a COVID loan, whatever we want to call it. Such a member has already got a loan. Your system now needs to be geared to actually recognize the member's fund level, less the home loan guarantee that's already in place, that be recorded on the member's record, plus now there's another loan granted. So the system needs to be able to calculate the balance that can be given to a member, and also needs to then have some blocks in place or flagging facilities for such additional loans. Communications would obviously be affected, also member benefit statements. We need to tell the member when a statement is issued that, listen, don't forget about this loan that has been given against or granted against your share fund. The same would then go for exits. When we process exits, we don't want to now process values which is actually no longer there because a member received the loan. And then also there would be tax implications as far as treatment of such loans is concerned, which would obviously and very clearly cut on an administration system and how we process it. So we can see that impact system and the administrator. Again, it would be imperative that the administrator that actually sits and does and operates the fund understands very clearly the parameters that was put into place. And that is my story. Okay, back to you then.
Thank you. Thank you. I was just unmuting there. Thank you, Geraldine. We moving on to the panel now. I'm going to invite all the panelists to join. Good morning, everyone. I know Serena has requested not to use video, and I understand why. I'm not going to use video either, just to save some bandwidth. And what I wanted to say, when we start, I don't think it's necessary to introduce everybody. Hopefully, if there are any questions about who we are, we can deal with those separately. What I want to do, however, is with the panelists' permission, start off with asking Zarina a couple of questions, and then just being cognizant of time. If there are any questions, just to keep them brief, please. Zarina, you happy that I start asking you a few questions?
Yeah, certainly go ahead, and good morning to everyone.
Thank you. Morning.
Morning, Zarina.
Morning.
Morning, Zarina.
Morning.
I'm going to Zarina, I'm going to start off, and I think a question that many people have on their minds is, what is the FSCA thinking of doing if the rules for suspension or reduction of contributions are not registered by the 7th of May, where contributions are payable for April?
Okay, so the FSCA's view on this, Wayne, is basically if the rule had been submitted during the course of April. Remember in Communication 11, we basically said that you submit rules, when funds submit rules, they must specify the effective date. Hello?
Hi there. Yes, yes.
Yes.
Sorry, I saw everything disappearing, so I wasn't sure what's happening. Sorry. In any event, so we basically specify the effective date, and so if you have submitted it within April, you ought not to have the concern that that there'll be problems come the 7th of May when contributions are payable for April.
So Zoom, if I understand correctly, and I mean some of the other panelists can come in, it's the question of submission, even if you haven't had confirmation that it's been registered.
Yes, that is what the rules department has indicated.
Well, I think it's extremely helpful. I think it's going to help a lot of people out there. I think it could be perhaps communicated by the FSCA that is the stance that they are going to take, because we've had quite a few questions on that point from RFA members and others. But I think that is something that is really laudable, and it's a really good sign.
Thank you, Leanne.
Anybody else want to ask anything further on that question?
Perhaps, yes. Let me, I am unmuted. So, if I could perhaps ask, I know you indicated your rules department indicated something. However, would there be consideration if one had to submit, let's say, not by the 7th of May, but obviously within a week or so of that, still going back to April? Would there still be and there's valid reason for such a delay? Would FSCA still consider that?
Geraldine, look, I think that unfortunately our rules department, and they, she couldn't join, Fikile couldn't join us, unfortunately, Geraldine, this morning, because we're not really allowed to use Zoom. So I'm just basically using Zoom on my son's laptop. But that's why Fikile hasn't joined. But I think it's something that we'll have to discuss. But what we can do for you, Geraldine, we can certainly revert, or we can, we'll correspond with IRFA, advise you accordingly. But
I think that would be good.
Okay.
We would appreciate that. Thanks very much.
No, you're welcome.
Thank you, Zarina. I'm going to move on to the next question. I think you've had a chance to look at them. I know you haven't had much chance to prepare. Is the FSCA intending to take action against employers and directors who suspend or reduce contributions for April or other months due to financial hardship, where the rules don't allow for this?
Yes, absolutely, Wayne. If any, but I suppose we would be taking action against
funds, I would assume.
Funds, because you are supposed to comply with your rules, and you can't act ultra vires the rules. So if you don't have a rule, that enables a certain action or non-payment of contribution or reduced payment of contributions, of course, we'll have to take action.
I don't know if anybody else has any other comments. I think that's a clear answer.
Very clear.
Thank you. If there are no other comments, I'm going to move on to the next question. Is the FSCA thinking of some kind of general exemption with respect to the suspension or reduction of contributions for employers and their employees in financial distress, even if this is subject to conditions or some type of other general action, as opposed to requiring specific rule amendments?
Wayne, you probably know this quite well due to previous engagements at NEDLAC, but certainly there's a very strong view held at the FSCA by the EO as well as the divisional executive that we will definitely not be granting a general exemption.
I think that's a response and not much debate about. Is there anybody else who wants to any comment there? All right, great stuff. I think thank you for the clarity on that. Next question. What is the FSCA thinking with respect to loans by funds to financially distressed members or employers?
Okay, maybe let me start with distressed members. So there's nothing in the Act, or even Section 19.5 basically deals with housing loans, right? And then you also have your Section 19.4 basically dealing with loans to employers, but not members. So if anyone wants loans to be effected to members, that would entail an amendment of, of those sections. So currently that's not catered for. So if that answers the first part of the question, then of course, the second part is in respect of employers, I think you said.
That's correct.
Financially distressed employers. So then I suppose the funds would have to apply Section 19.4 if it's within the 5% parameter. And obviously if they want to go up to 10%, then you have to come to the FSCA for that approval. The fund would have to come to the FSCA for that approval. Yeah, that in a nutshell, it would be it.
Thank you, Serena. Any questions there?
Yes, Wayne, just to follow up on the issue of the members that Zarina refers to, that it owns at the pension back lending. Oh, by the way, it's Thomas this side talking.
Thank you, Thomas.
What I'm interested in, this suspension and reduction has been done because employers are likely to face distress, financial distress. But that distress doesn't only apply to the employer. That distress also applies to the member. What has been the thinking? Because FSCA for us is mostly about ensuring that the members also are not done away. Because there's high cost, if you think right now, for the funds to communicate in terms of CF. The investment of the members are being depleted by the markets since with this high volatility, and the members' existing monies must be used to communicate every day. But there is nothing for the vulnerable members that have been put in place. Was there any thought around this? I understand the issue of Section 19.5 only allows the pension back lending, but what about the members' distress situation? What has been thought about from the FSCA point of view? Since the employer, something has been thought about that the employer can be exposed to financial distress.
Okay, Thomas, if I may come in here, I don't think that it's completely accurate to say that, the FSCA has only thought about the financial distress of the employers. Because even going back to Communication 11 and what informed Communication 11, it was basically to provide relief to both employers and members. Because remember, depending on the amendments that you require, that the fund requires, it could also be that, it could take various permutations. So if members are not for example, in a position to contribute, and they take that to the, there's the relevant engagement, communication, it's taken to the boards of the funds, and a resolution is taken that, the member, for example, will contribute, I don't know, a reduced amount or a 0%, then surely that should also assist members. So it's really, again, yes, it is at board level, but you are able to do that. So that should also provide some relief to members. So that's on that, in respect of that aspect. And then on, we've also taken cognizance of members in respect of, of risk benefits. That's why, Thomas, we've encouraged funds and obviously and employers implicitly to continue to pay full risk premiums, so that should anything, heaven forbid, happen to them during these very challenging times, then they're covered for their full risk benefits. So those are the steps that we've taken. Unfortunately, we can't particularly take, further steps, because any other steps or even amendments to legislation, remember that will have to be effected by National Treasury, not by ourselves. So if you're thinking of possibly amending, going beyond the 1995 pension back home loans, I think that is a policy issue, because, Thomas, when we speak about members, and I'm a member myself, we also have to take into account, is this the route we want to go? I'm saying, and like I said, that's not for FSCA to really determine, in my view. Let me just, make that clear. But I think even from a policy perspective, things that Treasury would have to consider is that by advancing further loans, is this going to assist members, or is it going to create further indebtedness? I mean, there's a whole raft of considerations that would go into this prior to any amendments being effected. Thomas, if you want to maybe raise some other aspects, but I don't know if that sort of answers you to some extent.
Yeah, to some extent, Zarina, I'm answered, but I was looking at it in a situation whereby the employer is going to contribute zero through this financial distress, which then means even is not also paying even the salaries, is going to be applying for TER for its members, which will only cover food on the table for a member when it gets paid. That means the member, even if he can ask for suspension through the board for his contribution, he doesn't have anyway a salary. Therefore, that's why I was thinking maybe there should have been some thought that the financial distress affects equally both members. If the employer can't pay its contribution, the member also is likely not to be able to pay its contribution. But the member has got no fallback position, but the employer at least has got funds that assist the business. The only position for the member is the UIF TER, which will take time also to come into fruition. The member is also in distress. And of course, I know it's a policy issue, but I wanted just to find that there was a thought around beyond what the member can just do, the normal suspension, but beyond when there's zero salary, which means there'll be zero contribution even from the member side. But thanks for Zarina. I don't want to bog down this debate.
If I could add a comment there, it's Leanne here.
Sure.
If you look at section 19, subsection 4, which is the one of the sections we're talking about, it talks about investments or loans to the employer by the fund. I don't think there's anything that would prohibit the fund from loaning money to the employer up to 5% and up to 10% on applications to the FSCA on conditions. So your loan to the employer could, for example, be on condition that it is used to fund remuneration of employees or whatever the case may be. I mean, I'm just thinking of conditions off the top of my head, but that would be a contractual arrangement between the fund and the employer. So I think that there are ways of ensuring that even if the loan is made to the employer, that members can benefit from it.
All right. Thank you, Leanne.
Okay. Noted, Leanne.
Thank you. Thank you, Zarina. I think we all understand that this is a legislative change if there were to be loans to members directly in this time. So, but thank you for the response.
Yes, from the fund. Yeah.
Wayne,
Yes.
Wayne, sorry, I don't want to belabor the point also, but just perhaps it's just really a comment or observation on this point. I mean, we have seen in the media that there are some of our political parties that is addressing this or intending to address it. Perhaps they have already with Treasury. I think, though, we are going to see a lot more debate around this specific point, because I think if we have a look at the economic position that we are finding ourselves in, and we can see that already it's estimated that maybe 6 million people are going to lose their jobs. So if we are in a position where we can perhaps prolong the loss of employment to assist employers and members, because the argument would obviously be if someone has not lost their job with their employer, but they are not being paid a salary at the moment, and perhaps that is going to be for some months. So now they've got no food, they can't pay any rent, yet perhaps they're sitting with R500,000 in their retirement fund. So the emotive argument there and the social argument there does become fairly valid. And we know from the papers and research done by chartered financial analysts, if you look at one of their 10 points that they raise on what an ideal retirement fund should look like, one of the points is that in the fund there should be the facility whereby members can access their money in the event of an extraordinary event such as this arising. So yeah, I believe we're still going to see a lot of debate around this point.
No, Geraldine, you're absolutely right. Sorry, Wayne, if I can come in here, you're absolutely right. I mean, Treasury is already looking at that. I mean, submissions have been made to them. It's something that they're considering. So I think it's, the space must be watched in that regard. But all I'm trying to say is that from an FSCA point of view, it's not something I think that will necessarily come from us. It will be from Treasury, and yeah, so, but definitely though, that is being considered by Treasury as we speak. You spot on there.
Perfect, thanks.
Thanks, Zarina. And I know this is a question you get and not one that you can answer, but it is a question I think that's asked often. And yes, I think many people come to the FSCA because we see you as the one-stop shop, although you're not.
Yes.
Then the next question, if I can move on, if anybody, I don't think that anyone else has any more questions to raise there, then is, will the FSCA allow any period longer than 6 months for suspension of contributions?
Look, Wayne, I would unfortunately have to get back to you on that one, because I think that is currently being debated, within the FSCA. So if I could revert to you on that, that would be great.
Thank you. Anyone have any questions there? Nothing.
Wayne, I don't know whether I'm jumping the gun before you ask your next question, but it's the measure. How do funds, what are the things the fund must take into account to measure the financial status of the employer? What the employer must produce so that the fund can consider really this employer financial distress? Is there any specific criteria that funds must follow?
Look, we haven't, if it's Thomas, sorry, I don't know who speaks, but I gather from the voice. Thomas, look, we haven't issued any guidelines because the view again taken by the FSCA has been that boards must determine the criteria that they will utilize to determine it. But I think it makes sense to obviously look at financial statements, the financial statements of the employers. It could be your cash flow statements for the past 3 months, I would say. But look, it's not something coming from the FSCA. I'm just saying those are the types of things that you can consider. Or similarly to, what was considered by TERS, I think is it, for TERS, where they looked at the 3 months of payroll. So there are various things that can be used, or maybe an affidavit made possibly by the accountant, or if it's a smaller employer, bookkeeper, or whoever is responsible for managing the financial affairs, or has that kind of oversight. Those are the things that I think one must take into account. But because that governance responsibility lies with boards, the FSCA deemed it prudent not to necessarily issue guidance or guidelines on that issue, Thomas.
Okay, thank you.
If I can just add also, Thomas, I think, Wayne, there is a question later on that touches on this.
Yeah, there is. You're right. It's an important thing in practice, but thank you. I think we will explore it a little more further down the line. Any other comments before we move on? Okay.
No, all good.
Okay. Then, Zarina, I think this is kind of dealt with this, but maybe something you can take back to your colleagues. What are the current turnaround times for the FSCA to register suspension or reduction of contribution rule amendments?
Well, I was advised that it's basically 5 to 7 days, Wayne.
Thank you. Statement. I thank you for the response. I don't think we need to take questions on that one. Then I think that the next issue, and I think we deal with this again a bit later down on, what electronic signatures are the FSCA accepting for trustee resolutions during the lockdown?
Okay, again, from what Fikile has indicated, it's Fikile Musomo, by the way, the HOD for rules.
Yes.
What she's indicated is that there has been some issues raised by her managers. So I don't really know what those issues are, Wayne. So I can't definitively really respond to that. So even on that question, if I could revert, that would be great.
Thank you. Thanks, Arina. Just so that we have it on record so that we can get a response. Then the next question, I think, might be something that you also have to get back to us on, but can the FSCA address the Section 14 process delays as a result of COVID-19? The question is, fund's ability to communicate with members and do roadshows is severely hampered at the moment. This leads to delays in the Section 14 applications.
Okay, look, that falls within Mrs. Mukupu's department, within Vilma's department. And so I think she would be best placed to respond to that. So if I could also just get her input. Unfortunately, I think there must have been some mix-up. So I think because I got the questions this morning, yes, I wasn't able to contact her to actually obtain a response.
Perfect. No problem. We'll thank you. We'll publish those when we get a response. Then the last question for you before we move to the full panel is, can the FSCA liaise with the Office of the Pension Funds Adjudicator regarding late or no provision of benefit statements for 2020, low investment returns on fund credits, delayed contribution of death benefits beyond the statutory 12 months due to the beneficiary's inability to provide certified documents and affidavits?
Look, again, Wayne, sorry, and I think it's my common refrain, but look, I'll have to discuss this with my DE because, we also respect the separation of powers, and it doesn't mean that we can't engage or liaise with the OPFA. But of course, as a separate body and statutory body, I think if you really want to, if these are issues, I think it would probably be better for for funds, or I don't know, for organizations such as yourself to engage with the OPFA if it is an OPFA issue.
Thank you.
But I can certainly take it, back to my DE, to Orlando, to ask him if these are things that he feels we can discuss with the OPFA. But I'll also have to first get his take on it before I can commit to it.
I think if I could just also add a comment there, I think as an industry, we should guard against, I'm not saying that is going to be the case in all instances, but we should really guard against using this COVID-19 as a reason for not timeously running, because your benefit statements and all of those are product from what is happening on your administration system. And I mean, there would be certain exceptional instances, but generally speaking, there should be no reason why your admin system is not up to date. We've been essential services from the start. So your admin should just carry on ticking over, and whether you receive contributions or not.
No, too true. That's a very good point, Geraldine. And I mean, even, I'm looking at the sub-points, the low investment returns on fund credits. I think that, that could easily be explained. Even if a complaint were to be lodged with the adjudicator's office, I think the fund would still have to explain. And I think you can take notice, obviously, there's been a significant downturn of the markets. I think they've recovered slightly, but so, I mean, these things can be explained. I'm just not sure that, even if FSCA were to engage with the OPFA, that, it would mean that there's no need for funds to respond on these matters in any event. You see, and then even in respect of, death benefit distributions, for example, and I see and beneficiaries' inability to provide certified documents. Again, I think you can explain it to that entity because, having been in that office a number of years before, for a number of years, I mean, before FSCA, I do know that, or at least the previous adjudicators, they feel quite strongly that within their province and sphere of work, this is their sphere of work, and that the FSCA ought not to really get involved. And that's why I'm also a bit reluctant to just, say, yes, we will engage. I can certainly, like I said, I'll take it to Orlando, but I think it's something for funds to consider. Is it something that you really want us to engage on, and where will it take us? Because if a member complains, as you well know, you're required to respond to their complaint. And I don't see the adjudicator basically dismissing it without without providing a response. And she's not going to respond on your behalf. I don't see that happening.
Thank you, Zarina, for taking the responsibility of responding for some of your colleagues as well. Are there any other general questions for Zarina before we move on to the other panel questions?
If I could just ask Wayne that when we deal with umbrella funds and general and special rule amendments, if we could ask if Serena, I'm not sure if she has knowledge on it or can speak for Fikile, but if we could just ask Serena to comment on that specific question as well.
Sorry, and I didn't get that.
Serena, I wanted to give you a heads up. We're going to be dealing specifically with a question around umbrella fund rules and whether you need to amend general rules or special rules, etc. So it would be very useful if we could get your comment on that when that question is dealt with, if you can comment, because I know it is a Fikile question.
Yeah, and look, I can comment, Leanne, because Fikile has indicated her views on the matter. So Fikile's view is that there ought to be an amendment of the special rules. So that is her view. But you're right, it doesn't fall within my department, but that has been her view on the matter.
Okay, great. I think we'll
When
explore that a little more when we get to that question, possibly. Can we?
Okay.
And can we move on to the questions? I'm just conscious of time as well. Thank you. Is everyone comfortable if we move on to our panel discussion, which obviously includes Zarina? So please take the opportunity to provide input if you feel there's anything you want to say on the matter. I'm going to start with question 1. And I want to pose this question to Gail, please, and then we'll work from there. I think everyone can see it online, but what I will do is just read it out. May a board agree that the expenses, fund-related expenses and risk premiums be deducted from a member's fund credit in instances where the reduced or suspended member or employer contributions are insufficient to meet these costs? Do the rules have to provide for this specifically? I think we have discussed it, but Gail, I mean, your view on this, please.
Okay, thanks, Wayne. We have discussed it. Quite a couple of the speakers have already dealt with this, but I think it's quite an important question. So I'll just summarize it for everybody. So the simple answer is yes, the board can agree that those expenses are deducted from the members' fund credits, but it must be provided for in the rules. So they can't do that without the definition of fund credit and the rules dealing with expenses in the fund actually allowing that to happen. So that's quite important. I think also just to note as background to this, that Communication 11 has said that funds must attempt to ensure that full risk benefit premiums are paid to the fund to ensure that the fund risk benefits continue to apply. So I think as a first port of call, the funds should make every attempt to ensure that the employers continue to pay those premiums. And this would only apply if they were unable to do so. And then also just to mention that the fund risk benefits would only be the lump sum death benefits and lump sum capital disability benefits connected to those death benefits. So any other risk benefits that are often dealt with by trustees, but actually are risk benefits that their employer-owned policies. So that those would be out of this ambit. So anything like unapproved death and capital disability benefits, PHI, income disability benefits, funeral, dread disease, all of those policies are policies issued by the insurer to the employer, and it really has nothing to do with the fund, although the fund often acts as a conduit of those premiums. But it's really important to note that those premiums cannot, under any circumstances, be deducted from member fund credits. And then also just to mention at a very high level, if there are concerns that a deduction from a member fund credit for fund-related expenses and fund-related risk premiums, if there's an issue around Section 37A and that falling foul of 37A, it would not, provided the rules allowed for it, because 37A provides that a benefit or a right to a benefit cannot be reduced while the assets are sitting in the member fund credit prior to a member resigning or retiring, etc. That money is not actually, cannot be seen as a benefit. It only becomes a benefit when it accrues to the member on a resignation or a death or a retirement. So that's, thanks Wayne, that's my 2 cents worth on that.
Great stuff, thank you. Is there anybody else who wants to deal with this in any more, have any more comments on this? I know we have dealt with it quite extensively already, but thank you for the summary. Yeah, I think that made it even clearer. Anyone else of the panelists? Great.
Oh, I'm happy.
Great stuff, thank you. Then I'm going on to question 2. Nancy, can I ask you to assist with this question? may contributions be suspended for a period, including contributions required to fund risk premiums and fund costs? Also, in the panel's experience, will the FSCA, I know we've dealt with this we've dealt with it already, but I think there's probably some benefit in adding your views to this topic.
Thank you, Wayne. I think, I mean, the answer is quite simple. If the employer and the employee can just not afford to pay contributions, there's not much that can be done. Safe to say that, I mean, if you have a rule that allows you to reduce or suspend your contributions totally or for a period of time, it will help the fund, and it will ensure that the employer is in no way in contravention of 13A, because there is a rule that allows for it. So yes, the answer is yes, you can suspend it totally for a period. There is a risk in that, because if it's approved benefits, the approved risk cover is not maintained for members of the fund, which is not in the best interest of members. But simply, if there just isn't anything to, there's not going to be any way the employer is going to do it. So I think it's safe to say that if the rules allow for it, you can do it, or if the rules don't allow, you've got to do a rule amendment to ensure that it does allow for it. And it's important for the fund. If not, you just continuously have to go through Section 13A contravention process whenever an employer is not paying contributions to the fund.
Thank you, Nancy. I don't know if there are comments from anybody else who on this. Fiona, I don't know if you have anything to add there, or Gail maybe.
Well, nothing, this is Fiona here, nothing on the first part, but in terms of the 6 months, we did initially submit rule amendments that allowed for 6 months, which was queried by the FSCA, which we responded to, and we had rule amendments with a 6-month period accepted. We do also have rule amendments that have been submitted with a 12-month period, and we are still waiting for the approval on those ones. And just to pick up on an earlier comment made about electronic signatures, and we know there's different kinds of signatures, electronic and digital. We have been submitting, and many of the large umbrella funds do, submitting rule amendments and Section 14s with electronic signatures for some years now, which has been acceptable to the FSCA. I think the difficulty now is that some trustees may not have access to that type of electronic signature type of technology. So the question is not really, will the FSCA accept electronic signatures? They have been doing so. It's maybe more of a scanned copy or a digital PDF type of signature, whether they'll accept.
If I could just come in here though, Fiona, I think you're right that digital signatures are accepted, but I think what Fikile was talking about this morning was that, there are certain digital signatures that are acceptable, and that there are certain ones, and I don't know, as I said, it doesn't fall within, unfortunately, my area of work, but which some of her managers find questionable. So I don't think it's an issue of digital signatures aren't accepted. Yes, they are accepted, and they have been. But I think that it's the nature of that they find of the electronic signature, that's possibly posing certain challenges. But as I said, Fiona, I think it would be best if I get the full details from Fikile, because unfortunately, given the short time within which we had time to prepare, I only chatted to her for about 5 minutes this morning on all issues pertaining to her department.
Thank you. Anybody else want to add anything to the question there?
When I would just like to say, I mean, how important it is that if employers are not able to actually pay contributions, how important it is to actually formally do the request to suspend the contributions.
Yeah.
Because generally many rules or most rules actually allow for termination of the employer's participation at after a certain period of time of not receiving contributions. And if the employer just continues not to pay contributions and you've dealt with your 13A issues, it just leads to the trustees of the fund actually starting to introduce termination procedures or terminating the participation of these employees on the fund. And we know how long termination processes take, and we know how much worse that would be for members of the fund if we have to go through that long process.
Wayne?
Yes, Thomas?
I just want to also to check on Marlene. If the employer was an errant employer in terms of contribution, was in arrears for various reasons, not sending over the contributions on time or not paying some months, will this particular rule amendment, how must it protect the fund around such employers who are not necessarily been paying properly, had to be followed up, had to be reported, and all those things? How do we deal with such employers?
Okay, if I could come in here, if that's okay. Thomas, look, I think that, we mustn't conflate issues. The rule amendment, obviously, that's going to come, or that's going to be registered and allows, whether it's temporary absence, suspension, reduction of pensionable salary, postponement of payment of contributions. I mean, that's one thing. But where employers are in arrears and they have that, and they have that history, of course, all the relevant steps still have taken vis-a-vis those employers. So it's not like this is going to be a out of jail, whatever that term is, but basically a free pass in that respect. So I think we must be very clear that where you are, and there are certain, and there are many employers, in fact, who are recalcitrant employers who haven't paid their contributions timeously or at all. And funds are still required to take the necessary action. And, action will be taken against those, or ought to be taken against those employers, because, it is a criminal offense as well, as I think it was pointed out earlier.
So Zarina, if I understand what you're saying, and all the other panelists, is that if someone has contravened Section 13A, you still need to apply whatever you need to do in terms of 13A. And COVID is no excuse for having done it wrong in the past.
Absolutely. And I think that, employers must be made aware of this if they're not, it's not the code, because I think what is happening, Wayne, and I think maybe that's why Thomas is asking the question as well. I think some people see this as and I'm not saying that employers haven't had challenges before this, because it has been tough times, even pre-COVID. But you can't use what is happening or what you're allowed to do following COVID and following these current rule amendments to basically say, this is my free pass to get away with not complying with Section 13A. Read with Reg 33. It doesn't work that well.
Thank you. I'm moving on to the next question, just cognizant of time, and we will have an opportunity to provide written responses as well from the panelists and other questions posed by the participants. Fiona, question 3. I'm not going to bore everyone by reading it, but I think it's on screen. I know we've dealt with it, but I think it's worth just talking through the point again.
All right, so what umbrella funds can do is they can amend their general rules to have an overriding rule that deals with the reduction of contributions for, let's say, the 6-month period, and provide that the employers will still contribute for the risk and expenses towards the fund. This has been my experience, and such a rule amendment was submitted and approved by the FSCA. The FSCA did then ask for special rules to be drafted, as Irina did mention earlier, that was a concern. Our response to the FSCA on that particular issue was that the general rules, in fact, as they typically do, override the special rules. And in addition, there are obviously certain cost implications, which obviously, given the entire issue around financial distress and COVID-19, would seem to fly in the face of trying to save money if we had to do multiple sets of special rules, as well as obviously creating practical challenges around resources and capacities, both with the fund and its administrators, as well as the FSCA. The FSCA have accepted that response. So the only time we do special rules, draft amendments to special rules, is if the employer in the particular case is doing something different from what the general rule provides. So that is how we've accommodated this particular situation. So, for example, as some of the other speakers alluded to earlier, if there is a complete suspension of contributions, that is not allowed for in the general rule amendment. So the special rules will have to be amended in those circumstances, because what that employer is doing is different from the special rules.
Are there any other comments here? Zarina will give you a chance. I know this is for Kile. Leanne, do you maybe want to add to that, or anyone else? Yes.
Yeah, so I would agree with that approach. I think it's very sensible. I think that the cost and the time involved with amending special rules will give a lot of participating employers is prohibitive, and especially in the situation where your general rules override your special rules in any case. It would seem to me to make sense to take the approach that you allow for something specific in your general rules, and then you only do special rules where you depart from that. If you look at the acts, and the case law around it. I remember the appeal board saying that special rules are simply a chapter of general rules. So just like a contract, you could override any other chapter in a specific chapter. So your general rules could override special rules. I mean, if you look at the regulations, it just requires that your rules set out calculation and payment. So as long as you can calculate what's coming in and you allow for payments of contributions, then your regulations are satisfied. So I would agree with that approach.
Wayne, I agree with that approach too, but I don't, like I said, if the feedback, if that's what Fiona got from Fikile, that's fine, but I don't want to commit to saying that is what she agreed, because I fear Fiona, I'll go back and I said, oh, okay, I believe this is the approach that you've now taken. And she'll say to me, no, why? Who said that? But I mean, to me, it's sensible. But like I said, I'm speaking for myself now. But if Akila's accepted that, that's great. If she doesn't accept it, I'm sure that individually you'll hear that from her.
I'm sure we will.
So I think thank you for that response. And I think the important thing, what we're trying to achieve with asking the question, is that there are probably multiple ways in which to achieve this, depending on your specific situation as a fund. And this is one of the approaches. It's not the only approach. And it's something that has been approved by the regulator. But no one size fits all. If I can summarize that, and maybe I want some backing up from the panelists there, if there's anybody else with a view on that, maybe Gail or Nancy.
I would heartily agree with the approach of amending the general rules and not necessarily having to amend the special rules. I think that makes sense. And that's what I've done. I unfortunately haven't had any responses yet on funds that I've been dealing with, but hopefully we will get positive responses soon.
Thank you. But I mean, I think the question I'm asking as well, Gail or Fiona, is just that, you know what I mean, you obviously need to be cognizant of what works for you in your situation.
Yeah.
I mean, I know this is umbrella fund, so that's a special, they probably have a different feature from a standalone fund, obviously, because I mean, there wouldn't be the requirement for special rule amendments.
Yeah, look, in standalone funds, what we've also done as a matter of interest is also just include a rule allowing for a suspension of contributions and not actually interfere with the contribution rules themselves.
Yeah. Wayne, if I could just perhaps also comment here from a non-legal mind, but from a layman's interpretation. I believe, I mean, we'll see. It's like Serena said, we'll see what Fikile says, but I do not believe that there would be anything legally that prevents one from doing this through the general rule amendment. I mean, if it's like Leanne says, I mean, your special rules is just a chapter of the general rules. Your general rules will really stand tallest. So, I mean, practically also, I mean, there needs to be really some solid ground not to accept this being done through general rules, because, I mean, our alternative to that is that we are going to have thousands of special rule amendments or revised special rules that's being done. I mean, if we're going to say, yes, we need to amend special rules, then why are we not having to amend special rules to tweak or alter absence of service clauses, which aren't currently allowed for in the general rules? Then we should by rights be writing absence and service into our special rules, which it isn't there currently. But that is merely my 2 cents worth on it at this stage. I hear what Serena is saying and what everyone else is saying.
Thank you for that input. Is there anybody else who wants to make a comment there? I think this is I mean, besides being a practical rule, I think it's also quite emotive in the sense that, you know, there's some sense of frustration. How do you achieve this? But any further feedback, any further comments on this? Great stuff. I'm going to move on. And yeah, we talk about it. The absence from service rule. Leanne, I know we've spoken about this a little. Do you want to sort of give us some feedback on that?
Wayne, my sincere apologies, Leanne,
yes,
also for interjecting here. We are receiving hundreds of questions, and people are emailing me also asking us how we're going to address these questions. Could you just quickly explain to our listeners how we will be addressing the questions we're receiving through the Q&A and the chat facility?
Yes, so once we're recording all those questions, I have provided responses for anybody who has sent it, that we're recording the question, and after the session, we'll give a feedback with all the questions that have been listed, and also give each panelist an opportunity to provide input on the questions raised. I just think it's easier than giving an off the cuff. Yeah, just giving an off the cuff response to it.
Great, thanks. So everyone will, so we're not going to answer the questions now, but they will receive answers later.
That's it.
Yeah, perfect. I think we'll also send the slides out.
That's correct, yes.
Okay, perfect. All right, so if I can deal with question on the screen. And really, this is just a heads up. I'm not going to give you a definitive answer to it, but it's a heads up. So if you are using your absence from service rules to allow for either, the question has been asked about employees who are doing some work from home, but not all their work that is required in terms of their employment contract. So they're sitting at home, they're doing some work. Are they absent from service? Now, what I can tell you is that there are different legal views on this. So some legal people will say, well, they are not absent from service because for various reasons, but for example, absence from service rules are there to deal with a temporary absence like maternity or secondment or whatever it is. And in addition, if they are doing some work from home, then they are not absent from service. Other legal people are going to tell you they are absent from service because, as an example, in the past, absence from service has been used for things like coming late from work or lunch or from playing games on your computer all day or et cetera, et cetera. So it has been used for that type of thing, which has been seen to be absence from service. So I think that you need to get your own advice on this. But what I'm saying is just be careful if you are using absence from service rules for members who are doing some work from home. You're going to have to form a view as a board as to whether they are actually absent from service. And what this has led to is some funds that are unsure on this point have simply said, well, for those specific members, we aren't going to use the absence from service rules. We're going to either amend the rules or do a general rule amendment because it's just simply less risky to do that. So I'm just raising it as an issue and something that you need to bear in mind.
Thank you, Leanne. Is there any more input on this issue? Thank you. Then the next question, I know we've dealt with this already in earlier, but Geraldine, I know you've also had some experience with this, and I know you mentioned earlier on, but maybe it's worth just summarizing your discussion from earlier on, just to remind us and then provide some clarity.
Yes, thanks, Wayne. This is a question that I've seen has come up quite a lot. I think a lot of funds, employers, administrators, consultants are not certain as to how to go about this. So, first of all, the fund must have a planned process that it's going to follow. You need to understand up front what is it that you would like to see. Obviously, there is, I think one of our panelists mentioned earlier on also, there would be differences between how you deal with a participating employer in an umbrella fund and an employer in a standalone fund. But in general, you would still need a process. So define your process up front. And then there is no specific fit in the box format that you can use, but I would recommend that you, as a starting point, you at least need a letter of application or motivation from your employer. So when we look at that, what we tell employers is put on paper, explain what has caused this financial stress that has motivated your application for suspension of contributions. So when you, and we also explaining to employers your motivation or your suspension can't be motivated purely because of the lockdown. Because some employers, there's essential services, some were essential services right from level 5 lockdown, some are only now becoming essential services. But perhaps you're also an essential service, but your trade perhaps has dropped by 80 or 90%, and therefore you're still in financial distress. Others, perhaps in the retail industry, have started experiencing the financial distress long before lockdown. We know that COVID-19 has come about, well, certainly in South Africa, it started showing up January, February, March. There were talks about it already, and trade in many public places already reduced and impacted on an employer's cash flow. So that is what we're telling employers. Tell them, engage with them, and tell them they need to explain their position. So if someone is applying for 3-month suspension, you know, perhaps you don't need to go into full analysis of financial statements and so forth, but also some are fairly easy. I mean, an employer that is situated, let's say, in a shopping mall, as an example, that runs a hair salon or beauty salon, I mean, common sense is going to dictate that, yes, they've been severely impacted. So that is the type of information that we would expect to see in the motivation. But in addition, an employer must then, at least in their application or motivation, state that the period of suspension. Is it for only member contributions? Is it for member and employer contributions? Is it what will happen with the risk benefits? What will happen with the costs during the suspension period? And then also the employer needs to at least say, listen, yeah, we have communicated this to our staff. Because remember, this actually, by the time it arrives at the fund, it is actually led on, it's initiated from a employee-employer contractual arrangement. There's a contract of employment in place with the staff member that sets out what type of benefits and income and cost to company this person is going to receive. Only from there does it filter to the fund. So the fund should at least see that, oh yes, this has been communicated to the staff. And then I would also say, you know, we explain how it was communicated via email, meetings, and so forth. And then, of course, we would need to have the contact details of the employer. So I would also recommend that there is then some kind of proof of the communication that was held with members. You know, you can issue a written communication. Many employers are saying, but and you can also ask for member representative to acknowledge receipt of such a communication. Many employers are saying, well, we can't communicate with our members because they're not at work. But I mean, we live in an era of modern technology. You know, we're telling employers, well, look, you can't just do this without having told your staff, because it affects them also. So communicate with them via WhatsApp, SMS, phone them, email them. Some employers are even taking pictures of communication and WhatsApping it to the members, and then sending something back from the members saying, yes, I've seen it, and I know you've discussed it with me. I'm happy with that. So the communication to the members must then also really explain for how long and what will happen with the insured benefits, what will happen with the costs. Are the costs going to be paid by the employer? Is it going to be deducted from your fund credit? And so forth. So once the trustees have defined the process and they have, let's say, agreed, they have to now at least give the employer some agreement that is put into place that just really reinforces and confirms the conditions of the suspension, and then they need to communicate this to members. So again, if the fund does not have contact details for the members, they can then send this details of this agreement via the employer, and the employer then, by signing the agreement, will acknowledge that they'll distribute that to the members. So I know that is a very long answer to a very short question, but I do believe it is imperative that a systematic and planned approach and process is followed, because it is a very serious matter.
Thank you, Geraldine. I don't know if there's anybody else that wants to add anything to that. Just cognizant of time, I know we have one more question. but I think that was quite comprehensive and insightful. Thank you. Thank you. I'm going to move on to the last question, and we've dealt with that. So I'm not going to add anything there unless anyone wants to make any specific comments around that. It's various, and we have had feedback from Zarina. Thank you. I would just like to thank everyone for attending, and again, just remind everyone that thank you for your questions. We have noted them. We will send a response shortly. We'll want to give an opportunity to the panelists to look at the question and provide considered responses. I would also like to hand over to the IRF president to just ask him to close the webinar for us, and we will be in contact shortly. Thank you.
Thank you very much, Wayne. And let me take this opportunity to first thank our participants who joined the webinar this morning. Secondly, thank the facilitator, Wayne. I think you did a stunning job. Thank you very much. And our important panel. Let me take this opportunity as well to thank Zarina, Thomas, Leanne, Fiona, Nancy, Gail, and Geraldine. Thank you very much for all those eye-opening responses that you gave during the webinar. Thank you very much. That's the end of today's webinar.
Thank you. Thank you. Goodbye.
Bye.
Goodbye.
Bye. Cheers.
Bye.
Cheers. Bye, Thomas.
Bye.